Hey, what's going on, guys? This is Greg with Ideal Trading Ideas, and today is June 13th, 2021. And as you can see, we have Limelight Networks up on the screen going for $3.25 as of right now, down 4 cents for the day or negative 1.24%. And after hours, we're up 6 cents or positive 1.88%. Now, the reason why I have Limelight Networks up on the screen is not really to talk about the stock and what they're actually doing, but more so to show you an example of the power of buying 100 shares of stock versus buying one share. So it's a reason why I always tell people to buy 100 shares of stock or more. And the reasons are laid out before you, right? So I'm going to go ahead and click on my Word doc. And reason number one is do your research and always buy 100 shares of stock to multiply your potential earnings, right? Example is if you buy one share of XYZ stock at $1, then you sell at $2, you're going to have $1 of profit, right? Or 100% return on investment, right? So you're going to have $2 altogether. You made $1 in profit. The extra dollar that you made is not going to be a big deal. You actually can go out on the street right now and ask a person for $1, and they'll probably give it to you with no big deal. You don't have to explain to them. You can just walk up to them, ask them for $1, and they'll give it to you. Now, if you buy 100 shares of stock at $1, obviously it's going to cost you $100, but you sell at $2, you're going to receive $200 back. $100 is going to be profit, right? You're still going to make 100% return on investment, which is right here, and you made an extra $100. That's going to be a big deal. You can't just go out and ask somebody on the street for $100. They're going to want to know a reason, and 9 times out of 10, they're going to tell you to get out of their face, right? You know, that's just the honest to God truth, right? So what we're going to do is move on to my strategy number 2, right? So we have, hey, always buy 100 shares, and the reason why, right? Multiply your potential earnings. Number 2 is do your research and always buy 100 shares of stock that pay dividends, right? So the example is you bought one share of XYZ stock at $1 that pays you 10 cents per month in dividends, right? And you times that by 12 months, you're going to come out with $1.20 in profits, or 12% return on investment, or an extra $1.20, right, for the year. If you bought 100 shares at $1, it pays you 10 cents. You're going to come up with the same amount times 12 months, and you're going to come out with $11.20 in profits, or 12% return on investments, which is going to be the same, and it's going to be an extra $11.20 for the year, right? So in one space, you're going to come out with $1.20, and in the other one, for buying 100 shares, you're going to come out with $11.20. Now, how does this benefit you, right? You know, people will probably still say, well, $11.20 is not a lot. But when you combine number 1 with number 2, you're going to come out ahead, right? Remember, if you had bought the one share and sold at $2 at some point, you picked up $1. If you had picked up, and that happened, let's say it happened over a 12-month time frame, you would have made more from the dividends than you would have from the actual sale of the stock. So you'd have picked up $2.40 total for the sale and dividends if you combine strategy number 1 with strategy number 2. So you would have came out with $2.20. Now, if you had combined strategy number 1 with number 2 on the second half and buying 100 shares of stock, you would have made $100 right here from the sale at $2, and you would have picked up $11.20 over a year time frame, right? Which would have mean that you pocket a total of $211.20 or $111.20 as profit, right? Over that year's time frame, right? If it doesn't sell for a year. Now, going down to reason number 3, do your research and always buy 100 shares of stock that can be traded in the options market. Now, the reason why you want to trade in the options market and buy those 100 shares is because it's going to bring you extra money, right? So if you bought one share of XYZ stock at $1, it can't be traded in the options market. You have to own 100 shares in order to trade, right? Now, there are other ways to get around that, but we're not going to go over that in this particular video. So buying 100 shares of XYZ stock at $1 can be traded in the options market as a covered call option, right? Extra profits will be paid weekly, bi-weekly, tri-weekly, monthly, actually even yearly. It's just up to you. Now, what we're going to do is kind of give you a quick example inside our spreadsheet right here, I kind of keep track of everything that I've purchased, bought, and I need to update a little bit more. But as you can see, I haven't always bought 100 shares or more when it comes to stock. We have PSEC right here that I own 40 shares at, right? So I own 40 shares of PSEC. Current price is $9.20. We bought at $5.03. The difference right now is $4.17. We spent $201.20 on this deal. They pay us 6 cents a month in dividends, right? 6 cents a month in dividends, or $2.40 a month for the 40 shares. In 12 months, they pay out $28.80. We want to sell at $9.50. It's going to be $380 altogether, and we'll come out with $178.80. Now, if we had bought 1 share of PSEC, you see the difference? We would have spent only $5.03, picked up 6 cents for the month, end of the year, 72 cents, and the difference on the sale, $9.50. We picked up $4.47 just for right here, just for selling it off, right? So we sold for $9.50, and $4.47 will be our actual profit, right? Plus the 72 cents that we've picked up in that, right? So if we change that to 100 shares, we would have spent $503. We would have picked up $72 in the year's time frame, and once we sell for $9.50, 447 of that is profit. So let's take a look at that. 447 plus 72, and we're looking at $519 in profit between the money from dividends and the sale, which adds up to be more than the 503. So we're above 100% return on investment just from collecting our dividends and selling at the $9.50 strike, right? Or sales price. So those two combined put us above 100% of return, right? So that's one way of looking at it. So we know that we only own 40 shares. And most people say, well, why would you only buy 40 shares if you know this? Well, you have to understand that as time goes on, our understanding of the market changes. We learn different things, right? So back then, hey, I only bought the 40 shares. I picked up my dividends. I only really cared about dividends at that point. And at the same time, we have to look at the difference in the price of shares, right? So PSEC went up past 4 to 5. We purchased. It goes into 6 range, to 7 range, to 8 range, and now 9 range. Nobody in their right mind, at least not me, will buy another 60 shares of PSEC at $9.20 when I'm in at $5.03. If we did that, it's going to average my price up. I may still be under, I'm actually going to be under the $99.20 range, but I'm going to miss out on that 503. So the only time I'm going to want to buy PSEC again is if I can get it at 503 or lower. I want to buy it at a deal, a discount, right? So if PSEC doesn't drop down to that range, I'm not going to want to buy it. I'll come out better just selling it right now at 920 and collecting those profits than waiting for it to drop all the way back down and losing out on those potential profits. Anyway, I just showed you that example when it comes to PSEC in terms of a dividend paying stock. Now, for those stocks that don't pay dividends, because remember what I told you, try to find all three, that doesn't always work all the time. And we have Limelight Networks up here. And remember, I actually own 200 shares of Limelight Networks. It's $3.25 right now, and I bought at $3.48, right? So we're down 23 cents in this deal, and current price is $6.96, right? Now, you see right here, it says that I picked up $96. So that $96 isn't from dividends because it doesn't pay dividends. But because we own 200 shares of this stock, we're able to actually pick up covered call monies. And in this case, we have picked up covered call monies. Now, we want to sell this off at $4.50, right? So we'll pick up $900 for the deal. 204 of that would be what? 204 of that would be our profit, right? So when we add 96 to that, we come up with 296, 298, $300. So $300 between the 204 and $96 would be all profit, all profit. Now, is that 100% return when it comes to what we spent out? The answer is no, it's not. But we picked up a decent percentage, right? We don't know if Limelight Network is going to make it up to 450. We believe that it can, so that's why we have a modest take profit at 450 set. So that's the difference, right? Now, that's when we're dealing with 200 shares. If we were dealing with 100 shares, obviously this would be changed, but dealing with 100 shares, you see, we would have spent $348, but in this case, we would be dealing with $102 in profit. Now, we own one share of Limelight down here that was actually given to us. As you can see, free stock shares given by Robinhood. That's one share, but we're gonna say, hey, we bought for $325 or $348, and it's worth $325. Same thing, 23 cents, right? $3.48 spent. And if we sell at $450, which is right here, we're gonna get $450 for it, and we're coming out with $1.02. We're not gonna be excited over getting $1.02 in profit. So that's why I say, hey man, buy those 100 shares or more. Don't fall into that same trap that I fell into like back in 2020 and 19 and so on and so forth, right? So I've been in the stock market for quite a while, right? So I know some people can look at some of these numbers and kind of get wild by it. Once again, we own quite a bit of shares when it comes to these companies. Obviously, these 5 or 6 are not all that we own. It says 16 right here. Actually, I believe I own way more than that on Robinhood. And we have multiple platforms that we're on as well. So anyway, we're going to push forward. I'm going to give you an example of Limelight Networks in the option contracts. As you can see, in April, we picked up $26 off of one cash secured put, right? And in May, we picked up $50 off of 2 covered calls and 1 cash secured put. And then so far in June, we've did 1 covered call and we picked up $20 off of this particular deal. When we add the different percentage rates up, we come up with 13.71%, right? So we minus out all of this from the 700 that we originally spent on the 200 shares, and we come out with $604. So right now, if we decide to sell even for the $3.25 that it's worth, right now we're averaging down at 302. So we're way above. We're in terms of our profits. We have profits even if we decide to sell for a loss of 25 cents so far, right? Because that's what's going on, right? From what we originally bought at to the current price, that's a loss of 25 cents. But we're at 302 because we've averaged down with all these profits or premiums that we've received. So this is another strategy, averaging your sales down, pick up as much as you can in terms of premiums. Don't spend that money, hold on to it, reinvest it, do whatever you got to do to continue to add more and more money to your portfolio. And this is one of our strategies, right? So going back to Limelight, we're going to kind of show you exactly what to do and in order to make that happen, right? So we pretty much showed you all this. 348 is our average cost, 201 shares, 8.51% of our portfolio diversity, up $4.02 for the day, or positive 0.62%, down $46.75 or negative 6.68. But remember, even though it says that we're down negative 46, when we go back to our options, we see that we've picked up about $96 right there, right? So we're not actually negative $46. We're actually up, right? So going back to this, how do you pick up that extra money? Click on Trade LLNW options, and you're going to want to click on sell call and expiring June 18th. What you're going to want to do is click an expiration or strike price that's above the actual share price. So share price is $3.25, strike price is $3.50, $4, so on and so forth, right, as it goes up. But you're going to look at the price over here on the side, which is going to show your premiums paid. They're not paying anything. 1 cent, 1 cent, 1 cent. So you're not going to get filled on this order, not going to pay anything. So you're going to want to change the expiring date to June 25th just to see, are they willing to sell anything? Once again, June 25th, they're not doing anything. So you're going to want to change it again to July 2nd. And as you can see, we have an order for $3.50 for $8, right? So this is probably going to change on Monday, which is tomorrow, and it may go up in value, it may go down in value. But as of right now, for July 2nd, they're willing to say, hey, you can sell this for $3.50 and we'll pay you $8 for this particular deal. So how would you make this happen? If you already own 100 shares or more, you would just go over here, take a look at it, $3.50. Let's say you got it way below $3.25. Say you got it at $3. That's a 50-cent gain from $3 to $3.50, saying that you'll sell at $3.50. And click on the positive sign, and it's going to say short call. $3.50 call, -8 cents. Total credit received is 5. So why is it showing you only 5 cents? Well, when you're dealing with Robinhood and dealing with option trades that's less than a certain amount, they're gonna kind of average you down, right? They're either gonna average you up or average you down. So if this was 10 cent, you can go ahead and get 10 cent. It moves in like 5-cent increments or whatever, right? So in this case, they're only gonna move you down because they don't want to stay in between 8 cent. They're gonna give it to you at 5 cent. Is that fair to you? Honestly, it's not. You're gonna lose that other 3 cent. You know, Robinhood's gonna take it and do whatever they want to do with it, right? So it says expected profit and loss, right? You're gonna pick up $5 from that deal if you have 100 shares. It's gonna say max profit $5, max loss unlimited, and break even is at $3.55. If you go over here at what it says at $3.55, that's gonna be your break even, which means you're not gonna owe anything. Now, if it goes up to 356, 57, so on and so forth, they're showing you the money that you lost, but does that mean you've lost money? The answer to that question is no. This is potential money that you could lose, but you're not gonna lose it because you said that you were gonna sell at $3.50, right? So once the price hits $3.50, it doesn't matter if it goes to 4, 4.50, 5, 6, it can go to 100. All that is potential money that you could have gained. You said you were going to sell at $3.50, which means your shares are going to sell off at $3.50. As you can see, I have 2 contracts equaling 200 shares. I'm selling off at $3.50. So if the price next week goes up from, or in 2 weeks goes from $3.25 to $3.50, my shares are going to sell off at $3.50. If it goes up to $4 in that time frame, all the money from $3.50 to $4, I don't see at all. So that's why you see it says loss right here. That's just all the money that I could have made, but I'm not going to make when you're dealing with covered call contracts. Anyway, what we're going to do is scroll back up. You'll click on continue and you'll put in your contract amount. Remember, 1 contract equals 100 shares each. So in this case, you'll put 1 and then it's showing you limit price of 5 cents, right? Minimum credit $5. You will click on review order and you see not enough shares. You don't have enough shares with LNW. Collateral needed to sell at $3.50, right? So that's just for me, right? Because we don't own any more shares of LNW. We only own those 200 shares and we're already using them. But for you who have, you have 200 shares or 100 shares or 1,000 shares or whatever it is, you will be able to do this trade, right? So anyway, we're going to go back one. And we're pretty much going to end the video out. Hopefully you guys have learned something about, the 3 strategies. Once again, buying 100 shares or more to multiply your potential earnings, picking out companies or stocks that actually pay dividends on, on a monthly, quarterly, semi-annually, annual basis, and looking for stocks that actually trade in the options market. So hopefully you picked up something from the video. Once again, if you have any questions, concerns, comments, hey man, just drop them in the box. And man, I really do appreciate all the love and support on the videos. Once again, have a great day.